Hey there, welcome back to Inside. I'm Rachel, and we're here with Heather from Foster Financial right now, chatting all about
donor-advised funds.
There it is.
So we talk a lot about charitable giving when I come on, but I want to specifically talk about that because there's a concept. We've been using this concept for a very long time, and we have always had some kickback. It was like we called it the double donation strategy, or the triple donation strategy, or the all-in strategy. And what it meant was when we had the tax code change and they doubled everyone's standard deductions, most people cannot itemize their charitable giving. And while you got a little bit of a write-off the last couple years because there was a COVID special as a frontline deduction on charitable giving, that's gone back to no charitable giving, basically deductions, unless you give a lot of money away. So people who are, let's say, giving $10,000 a year away to their churches and their charities, they can't claim it basically because their standard deduction, or what the government gives you for free, is way more than that. Most people fall under, for a married filing joint couple, they get $25,000 plus in free money, if you will, as a standard deduction. So you have to give away more than that really to be able to itemize. So instead, what we suggest doing is saying, hey, if you gave away 10 this year, and you know you're going to give away probably 10 next year and the year after, why not give 30 away all in 1 year? That allows you now to itemize, and not only will you get to itemize the charitable giving, but you also now get to write off your state income tax and also your property taxes, which has a cap of about $10,000. So you might be able to write off $40,000 instead of the standard deduction. The kickback that I used to get, Rachel, was, but I don't want to give my church and charities 3 years of giving all in 1 year. They wouldn't be able to budget for that, and that was the concern. So I started having people doing what we call donor-advised funds. Donor-advised funds is basically held at a charitable organization, and their whole design is to hold your money in their hands. That's all they're going to do. You're going to donate it. You'll get the big write-off for 3 years of your giving, and they're going to hold your money, and you now grant out of the fund as you please. And it's very easy. You can even set up reoccurring donations to your church. You can say, hey, I want my church to get a check every 2 weeks, once a month, once a quarter, whatever it is, you can set it up. It's very easy. You're doing the donation, they're going to hold your money, and then you're going to grant out of the donation fund for the next 3 years. You're in control of those grants, who they go to and when they go to them, but you're getting that big upfront deduction where you can actually write off your charitable giving. We suggest people to consider, even donating even more than that. Maybe consider, if you know you've got the cash set aside and you're going to be donating, maybe give 5 years worth or 10 years worth of your giving all in 1 year. You'll get a really big tax write-off, and all of it will now count as a tax write-off versus you giving a little at a time, which gives you no tax benefits whatsoever. So donor-advised funds, and if you're giving that much, people sometimes go, but what if the money would have been invested? I would have made some money on my money. You can put investments in these. So they do hold investments. We like to use Schwab Charitable, and then we actually can choose the investments. Depending on the time horizon, we can invest it into just about anything. So you can go conservative, moderate, aggressive into different funds. We can also buy individual stocks in these accounts. So you can donate 10 years of your giving, get a huge tax write-off. Really great idea for people who have one random really high tax year. They get a big bonus. Maybe they decide to sell out of their company stock, something along those lines. It's a good way to offset some high income years. But even if you're just giving even $5,000 a year in charitable giving, if you consolidate that to give one big lump sum all at once, you'll get that big tax write-off, and then you'll just donate to your charities as you normally would, year after year, little by little, but you're doing it out of the donor-advised fund as a grant.
Yeah, and I think, Heather, every week we mentioned, if you don't know where to even start with this, you guys are always the perfect person to ask.
Yeah, right? we love to set these up for people and help them understand the tax concept from it, especially the tax savings, because think about it, if you don't pay taxes on money that you would have otherwise paid taxes on, and it's to the tune of maybe you're in the 22% bracket or the 24 or even the 32 or the 37, that just saved you 32%. And if you want to look at it this way, give 32% more to your charities then. So it's a win-win for all parties involved.
Thank you so much, Heather, for being here. Once again, there's no dumb questions out there. Heather will answer all of those for you. Just reach out to the number on your screen for any of those questions or just for your financial help today.